Good evening, everyone, and welcome to this question and answer session. All right, so if you want to ask a question, you can simply unmute yourself and you ask, or you type it on the chat, and I'll be able to answer. Or preferably just type it on the chat, because I think a lot of people will have maybe network issues. All right, network issues, and yeah. So type your questions on the chat, and I'll be able to answer them throughout this session. Okay, this is just a question and answer session. And I think we have covered a lot of topics already, so I want to see a question so that we'll know if you are following up. All right, so the first question is coming from Levi. He says, hi sir, are you able to briefly explain the CRT concept and how it works, just for us to start practicing it on the chat? All right, Levi, I've actually made a whole playlist on YouTube about CRT, so I will advise that you go through my YouTube channel, Gospel FX Trader, and then you go through the playlist of CRT, all right, because it's a whole concept. I'll not be able to explain it on a single video, all right, but just to brief you, as you mentioned, CRT concept simply means you use candles as ranges, all right. Now, remember, a single candle like this is still a trend on the lower time frame. Okay, let's say that this is a daily time frame, which is a bearish candle. On the daily time, on the 50-minute, we're still likely going to see a downtrend like this. All right, so which means a candle like this on the lower time frame is a whole trading range. All right, is a whole trading range. Now, let's say, for example, that price actually approaches a level of support. Okay, let's say price approaches a level of resistance. All right, now let's say this is an area of resistance. Okay, now you wait for price actually approaches this level with a candle like this, with a bearish candle, and now we have a bullish candle, opens and then trades up like that. Okay, so we have a bullish candle, trades up, that's an engulfing, right? It engulfs the previous candle. Let's say it even actually takes the low of that candle, something like that. Now, automatically, this candle is a range, okay? Remember, the first candle here is like a range, okay? So the candle theory it says that every candle is a range, and on the higher time frame, or even on any time frame, every candle is actually a range, all right? But when it comes to reversals, that's when we start to treat CRTs, okay? Now, how are you going to see this on the lower time frame? Because if this particular candle, this first one is our range, all right, so how are we going to see it on the lower time frame, and how do we trade it? All right, now this is what we are going to see on the lower time frame. The first candle is going to open, or let me just put this so that it will be easy for you to understand. This is how it's going to look like: the opening, the low, and the close. And then this second one, this is the high of the candle, this is the open, this is the close as well, and then this is the open. So we're going to have a candle that actually looks like this. We're going to have remember, this one opens up, right? So this was the opening price, and then it creates a high, comes down, creates a low, which is here, and then it goes back up like that. So the next one opens, and what happens? It takes the low of the previous candle, which is this one, and then it goes what? It goes to take the high, and then creates a high like that, and then it closes. Now, if you just look at this range on the 50-minute, if you just look at what we have here on the 15-minute, you will notice that the range of the first candle, all right, this was the range of the first candle. So price took the low of the range of the first candle and went to take the range of the high of the other candle. So this candle is the candle we call our CRT. This is going to be a candle range, okay? And now as price take the range of the range low, which is the CR low, and then it goes to take the CR high. Now this concept is mainly for reversals and actually continuation. Sometimes you're going to see it when price is trending, all right? You have a short reversal and then price continue, or you can still have a continuation from it. Let's see. I don't know if I'll be able to see a quick example, and then so that I can show you guys. Now let's look for a short example or just a brief one. Let's say, for example, now this is an example here. All right, so from this chart here, currently, you're going to see something like this. Now, with the candle range theory as well, like I was just mentioning about two candles. sometimes you're going to have about three, it's mostly three candles, okay? Mostly three candles are the best for CRT, okay? But sometimes you still have two candles which forms that engulfing, but most of the time it's three candles. And with the concept of CRT, a candle range is only valid when this candle two, all right? So candle one forms a range, then candle two, all right, should take the low or the high of the CRT of the candle range you're talking about, and then closes back within. All right. When it closes back within like this actually confirms that price is definitely going to be taking out, going up to take the high. All right. Also, this depends if it is happening on a key level. All right. Like I said, this whole big lot topic, we cannot just exhaust it on a single video. So when we have something like this at maybe probably at a key level, we expect now the second candle to do what? The candle three to open and then trade towards the high of the CRT. Now, to understand what is happening here on the lower time frame, we're going to see that price was actually trending down. And what happened? The next candle opened and then traded lower, take the low of this one, then went back up to close somewhere. All right, now we are already getting a break of structure here. All right, now remember this is the high of the CRT and this is the low of the CRT. Now, this little accumulation here is this candle two, right? Now what happens? Candle three opens, all right, and then it trades towards taking the CRT high. Now if you look here, you're going to notice that we're kind of like having a reversal structure or something like this, and then price reverses, it goes back to take the high. All right, so it is simply a concept that says a candle is a range, and it has more confirmations as well, which this one is part of it. If this candle could have closed below this low, it will invalidate it to be a CRT. So when you see this confirmation now, the next possible target is the CRT high, mostly on the higher time frame. Why are you mostly targeting the higher time frame? Because the next candle, the range of the next candle here is actually going to be big on the lower time frame, right? So this can be about how many pips on the lower time frame? Maybe you can see here is about 65 pips on the lower time frame. So it is a big range. But what if this was the 1 minute? Maybe this would just be like 2 pips. So that's why you focus on the higher time frame. All right. So like I said, I have a very I think about 19 videos more playlist on YouTube concerning that. Okay, Levi, I don't know. I've briefed you. All right, as a beginner in trade, is it advisable to trade multiple pairs or just one pair for the start and multiple which preferable pairs to begin with? Now, that's a very good question. As a beginner trader, all right, there is what we call specialty, all right? You have to always specialize on a niche. That's one important thing that people don't understand. Now, you can see a lot of pairs on my watch list, but I focus only on few, three at most. All right, three at most. Now, as a beginner trader, focus on one currency. All right. Now you can focus on two. Maybe one is volatile and the other one is a little bit low. Like Euro USD is not that volatile, and gold is volatile, Bitcoin is volatile, like GBP, GPY. Now you can choose Euro USD and gold, or but I don't recommend a newbie to be trading gold, all right, because it's too volatile. You need to have already mastered trading to a certain level that you'll be able to make fast decisions. Okay, you have to be able to make fast decisions before you can trade such volatile pairs. Now, for you, as you're still learning, put yourself down, master everything, all the moves that has to do with Euro USD. I've been trading Euro USD for more than 7 years now, all right, and I've not changed it. So I basically know how it moves. It's gonna be much easier for you because not every pair moves the same. When you see a pair like GBP, GPY, a day it can cover a lot of pips. With Euro USD, it almost doesn't do that, and with so many other pairs. All right, so you have to understand the movement of each pair that you want to trade or you want to specialize in. There are people that only trade Nasdaq. There are people that don't trade anything apart from gold. So when you bring in too many pairs, you are just distracting yourself, and you are even telling yourself that you are desperate to make money. Why? Because you feel like you have a lot of options in your hand. When you don't see a setup on this one, you are jumping to the other one. It shows that you want to get a setup at all cost, which is not the best thing for you. All right, now like I was saying about this example, the third candle here opens and is likely to be targeting the CR high, but this is very important. It's not just every candle that is a CRT candle. All right, This has a complete narrative. It has a complete context. You don't just jump into any candle to become your CRT. Like I said, this is a whole topic. Maybe with time, I'm going to have another class again to talk about CRT. But for now, you can go to my YouTube channel. You watch the lesson that we have there on CRT. Okay. All right. Thank you. I understand. We'll go through your videos on YouTube. I have one of the best playlists on CRT on YouTube. All right. So, guys, I'm waiting for your questions. You should be asking questions. If you have a question that you can unmute yourself and you ask, you let me know on the chat so that I'll allow you to unmute yourself and then you ask the question. All right. All right, Ojong, I think I've answered your question too, right? Stick with two maximum. All right. One is even much better. Once you take one pair, you master it, you practice it, you start to understand its movements. Okay. Please, can you use a key level more than once? Yes, you can use a key level more than once. All right, you can use a key level more than once. Let's quickly see if we can even see an example of that. You can actually have another block that has been retested like 2 times, okay, and it's still valid. You just have to, let's see if we're going to see any key level, probably even like a fair value gap. Sometimes you can have your fair value gap, price will come there, come again, come and come again like that. All right, so, but 2 times is maximum. But when it's coming again, it's likely because it did not fully mitigate something on the lower time frame. You get it. All right. If it's coming again, it's simply because it did not fully mitigate something on the lower time frame. So take note of that. All right. Like for example, this one here. Okay. If this is our order block here, all right. Now you're going to notice that price actually came back here. All right. So this was already a reaction from this other block, but later on again, price came back to it. Now, if we want to see what actually happened here, there is a possibility that price did not fully, or this move here did not fully mitigate all that, mitigate the liquidity here on the lower time frame, which means maybe now on the lower time frame, we still had some fair value gap that price did not fully respect, or even a lower time frame. Good. This is a perfect example. Now, look at this was the 1 hour order block, and now when you go down to the lower time frame, we'll notice that there was a 15-minute order block there, and this move here did not touch the order block, but it did touch the order block on the 1 hour. So that's a reason price came back to it, and then it still respected. So that's what I said. Price can actually buy off, maybe because it has respected the higher time frame, and if it's coming back again, it's definitely because it did not fully mitigate on the lower time frame. All right, but take note here, as you can see, price actually reacted to the 1 hour order block, but now there was a lower time frame order block there that was not fully mitigated. All right, so but you always have to be smart about it. If you don't see a lower time frame reaction, or you don't see a lower time frame liquidity there that price is coming back for, it is a little bit tricky. Maybe you might want to actually wait for confirmation. All right, so yeah, I think yes, but I've given you the reasons. All right. Thank you, sir. Understood. We'll go through it. All right. Please, can a key level be used more than once? I think I've answered that, right? Now, what habits or daily routines separate successful Forex traders from the rest? All right. That's a very difficult question, but it's very, very important. You know that habits build you as an individual, right? Your daily habits builds you as a person. If you're that type of person that sleeps around every day, this is going to reflect in your trading account. It's going to reflect in your success. It's going to reflect in your results, right? It's just like you have a student that doesn't study, that does not do anything. In fact, you always playing is going to affect your results. So as a person, your habits and your daily routines, they have great impact in your mind first. All right. Remember, trading is about the mind most importantly. So when you have habits that are intoxicating your mind, or you have habits that are not healthy for your mind, then your mind will not be able to process the trading, will not be able to process trading properly. All right. Let's say, for example, uh, I don't really know which type of an example to give, but I'll just talk about the daily routines that are actually separating. So, like you mentioned, right now, getting up early is one of the things. All right. It makes you have more time to actually analyze yourself or analyze the market and be prepared. All right. Be prepared to trade. It's just like you are ready for something. All right, you are ready. You create time to be ready for something. And now also, let's say doing exercises. Remember, exercise is very important, and it's one of those good things that you as a person has to do. Why? Because trading has a lot to do with discipline, and the exercising is one form of discipline yourself. All right, discipline yourself. What discipline is more like, you there is something that is painful, but you have to do it. All right, that's what builds discipline. So when you build that discipline, you are able to control yourself. You are able to say that, okay, I'm going to enter a trade if only price comes to my key level. And you are able to do that. That's discipline. All right. Just like, for example, here, if this was a analysis that we're doing, I would say, okay, this is the key level I want to enter in. So when I see this move to the upside, I'm not going to be triggered to enter. Why? Because I'm disciplined and ready to follow my plan. So someone that is not disciplined cannot be able to exercise, because you say, tomorrow I'm going to go to the gym, tomorrow I'm going to be running, and tomorrow will come and you look at yourself, you are feeling sleepy, you want to eat and all that, you say, I'll push it to the next day. Someone that is disciplined will get up, pack himself up, wear his sport dresses, and then take off, right? No excuses. So when someone that is not disciplined, or like a successful trader will be waiting for price here. But unsuccess or bad traders, or those that are not successful, they will want to catch every of this move. All right, they will want to catch every of these little moves. They will play around here with price until the moment price comes here, they don't long have capital to trade that particular move. All right, they cannot follow their trading plan. So one of the things I do personally is getting up early, marking up my charts, and preparing for the next day and preparing for the day. And then also, I go to the gym just to prepare myself mentally and physically. At least you need that confidence, right? The most important thing when I even get up in the morning is back testing, getting myself familiar with my setup, uh, building that confidence. Because if you are not confident of an order block like the one that I marked, when price will come there, you will not want to engage. Why? Because you will just see the way the momentum that price is coming in, and look at this candle. You'll be scared that price is going to go through. But if you are confident, which is because you have been back testing, you will be able to take the trade. All right. So the daily routines, like I mentioned, maybe getting up early, it doesn't necessarily mean every day, but for someone that's already successful, sometimes I can just decide I will not trade that day, and maybe I get up really late, maybe I did not sleep at night, and things like that. So exercising is very important, and then reading. Every routine that has to build up your mind, all right, is what successful traders tend to do, because trading is about your mind. All right, it's about their psychology. So every routine in a day that will build up your routine, your mindset, will have impact with your psychology, is very, very important. All right. So if you are spending your whole day watching TikTok and laughing, all those things like that, it doesn't have good impact on your psychology. All right. It's rather you are being lazy and you are being distracted and stuff like that. So yeah, I think you understand what I mean, right? So let's get to the next one. Can you enter a trade exactly when you notice an OB? Of course, if that's your strategy, any other block that you see and it aligns with your other block confirmations, you don't have any other option than to enter the trade. You don't choose trades. All right. Once you analyze a trade and see that, okay, this is another block, I have to enter this trade, you don't have any option again. You must enter the trade. If you don't enter the trade, what you're doing is you are building inconsistency, you are instead promoting indiscipline. All right. Once you have your confirmations, if you're trading other blocks, once you see it, you enter. All right. If it's a loss, it's a loss. If it's a win, it's a win. That's it. It's a numbers game. All right. If you are being picky, sometimes you will not pick the right one and it goes your direction, you start to cry, but the next one you pick thinking that it's going to be the best, it instead goes against you. Euro USD, which time frame do you mainly focus on for your analysis? I said last time that if you have 100% to do your analysis, spend 80% on the higher time frame. All right, spend 80% on the higher time frame, which is the daily and the 4 hour. Okay, spend 80% on that time frame. Wait for price to approach key levels on the higher time frame. When it does, use 20% on the lower time frame to execute or to look for confirmation and execute with proper risk management. What is the best session to trade Euro USD? London session is the best. Next is New York session. It depends how and which time you are. There are people, all right, that when they get up to trade, the first session that comes to them is New York session. So I will not be saying that London session is the best for everyone, but I like London session, all right, because of its volatility, but New York as well. Okay, now most of the time, if Asian session accumulates like that, and then we have London session manipulating, in a day like this one, London session is the best to trade because it will automatically start a reversal for the day, and maybe New York will continue. But sometimes, if London session is accumulating, then we can get that manipulation during New York. It's all about the volatility that is coming in. Sometimes London will be slow, New York will be slow, and we end of the day a ranging candle. All right. But London session is good and New York session. Understand that most of the time London session does a manipulation and New York continues. So when you understand the movement of each session, it's much better for you. Which is more effective for Forex, technical or fundamental analysis? Both of them are correct, all right, but you have to actually understand what the candles are telling you. When fundamentals come, they don't go against the technical analysis. Why? If you had your technical analysis well, the fundamentals will follow it. Why? Because the fundamentals, technicals are telling you what is about to happen, and it is happening, all right? So when you have fundamentals, they actually align to the technicals. Now, if you did your technicals and the fundamentals came and went opposite, definitely you did it wrong, right? So, but fundamentals are good in the sense that you use it to measure the times that there will be wild movement in the market, so that, okay, you can stay out of it to protect your capital and so on. Because if you're wrong in your analysis, the move against you can be very huge and cause slippage, which will not respect your stop loss. So it's good to work hand in hand with them. Each day I go to Forex Factory and then I check which news is coming up, so that I'll know that, all right, by 1:30 I'm not going to trade, or by 2:30 I'll not be trading. All right, so it's always good to check. Please, how can I develop my own trading strategy? All right, developing your own trading strategy is not magic. All right, I teach you a lot of things, but what you have to do now is, as you are practicing, you're going to start noticing that you are more interested in something. You're more interested in the particular way that price moves. All right, you cannot just copy what I'm doing exactly, but I give you knowledge. That's why I taught you fair value gaps, I taught you other blocks, breaker blocks, and so on. Now there are people that trade only breaker blocks. That's the strategy. There are people that trade only fair value gaps. They don't trade other blocks. Before they enter a trade, they want to see a displacement and then they enter on the fair value gap. Now, this is just about it, right? Let's say the market is trending down and then we have a break of structure. Now, one person will do what? Will mark out its fair value gap. I'm going to enter on this fair value gap. Another person will mark by the other block. I'm going to enter on the other block, right? Now, all of them have their reasons for entering, because the person on the other block has his own confirmation. The person of the fair value gap has his own confirmation. Price can come here and go up. This person will not be tagged in. Some days he will come down, tag the person down, and then go up. But this person will still be tagged in as well, because his stop loss is going to be down here, right? Now, those are trade breaker blocks. They want extra confirmation, which means they'll say, okay, this is going to be my entry if only price creates a leg like this, goes up, and then comes back down. So if price creates this leg as an inducement, goes up, comes back down to this point, now, these people down here might not partake in the trade because price will hit here and go up, right? But now, when that happens, these people of fair value gaps, they simply just shift their key level now to what? The other block man will shift to this point. The fair value gap man will shift to this point. So you choose your model. You choose how you want to trade. You backtest and you become used to it, and that's it. I cannot tell you to just be trading other blocks. Maybe you don't like it. You are more interested, or you see fair value gaps more often than other blocks, and then I'll not be able to tell you exactly which one to follow. Right? This is another block here, and then this is a fair value gap here. So you can now decide which one do I want to trade most of the time. Is it the fair value gap now? If you want to trade fair value gaps, though you enter here, your stop loss still has to be above that zone. All right. So I cannot tell you that this and this and that. All right. So it's going to be with time as you are practicing and backtesting. All right. You become used to it. Any setup that and then you choose it. But you once said we should not trade the manipulation. Yeah, I didn't say you should trade manipulation. All right. I didn't say you should trade manipulation. I said London session brings manipulation. If Asian session accumulates like this and this manipulation happens, this is not the move. I'm not saying that you should buy this move. What I'm saying is when this happens, you know that now it's a manipulation. Then you look for your entry now, all right, to the downside, and then you trade the distribution phase, which is still from London session towards New York session. Okay? I didn't say you should trade manipulation. You are not to trade the manipulation. All right. Does Euro USD get affected with news like Euro news during the London session? Yes, it does. Please, can you explain the concept of time and price? That's exactly what I've been trying to explain already, right? London sessions like that. There are so many time and price concepts. There's one about which is called quarterly theory and all that. I've made a lot of lessons on that on YouTube. Time and price is a whole strategy. Understanding sessions, what this session is most of the time will do, understand what this session will do most of the time, and stuff like that. Okay, it's very important. So how can I use volume profile with this strategy? It depends on you. I don't use volume profile, but it's a good tool. All right, it's a good tool to measure the volume of the buying volume and the selling volume that are involved in the asset you want to trade. Okay, I won't say that you should not use it. Suppose that we are looking to buy this, and then you notice the volume. I don't know. There is actually one tool on TradingView which is about that volume profile. I don't know if I'll be able to see it. Well, there's one here which we have volume, fixed range volume. Okay, this one is one that's called fixed range volume. You use it to, supposedly, if this is what you meant. Okay, now this is it. This one is just to tell you where exactly the amount of volume or the amount where the heavy volume came in, right? So that's it. I don't really use volume, but it's good. All right. You can use it to solidify your key levels. If you have a key level and this shows you that much volume is coming from that key level, it actually increases the chances of that volume playing out, that particular key level playing out. How do I use support and resistance effectively? Support and resistance is still the same like other blocks, right? Or if you have an area where price bounce off so aggressively, in this zone, you are going to have a bullish order block, right? So if price comes back to the bullish order block and you're buying, it seems like you're trading a support level, okay? So when you have your resistance level or support level, go in there and then you look for a key level. All right, go there and look for a PD array. For example, if you have an area like this, right here, you're going to have a bearish order block. If price comes here, respect the bearish order block. This is still what? This is a resistance zone, right? Also, when we're talking about support turn resistance, you can have an area here, all right, which is, first of all, which this was your support, and now it wants to become resistance. Definitely, you're going to be having a breaker around that area. You mark out that candle, which is your breaker block, price returns to it, and then you sell. Sometimes you're going to even have a fair value gap here. You always incorporate that with PDRS. So from your vast experience trading Euro USD, which ones does Euro USD like respecting on higher time frame, OB or fair value gaps or breaker blocks? All of them. It respects all of them. So what are the best indicators to use? Best indicators to use. I don't use indicators that way. I don't use indicators that way, right? I don't use indicators to tell me what to do. I use them maybe just to add confluence to what I'm looking at. I use indicators to show me time, I mean sessions. Like you can use Lux Algo sessions. That one is to show you time and price. You have this one, okay. This one is just to show you time and price, okay. Like many of you asked, you're gonna see London session, New York session, and all that. Okay. If you look on my screen, you see Tokyo, London session, New York session, and all that. Like for example, with the explanation that I gave the other time, you will likely see that okay, here we had New York session giving us what is this? Oh, this is crazy. What did I just do? Okay. Mm. All right. I think I've just messed up my charts. Messed up my chat so much now. It's crazy. All right. All right. So what's the best way to set a stop loss and take profit logically, not emotionally? It depends on your strategy. If you are trading other blocks, then you have to place your stop loss at the high or low of the other block where you are getting it, right? That's simply it. If this is your other block and you get in, your stop loss should be at the high of the other block, because why should price invalidate the other block? Price should not invalidate the other block, right? So your stop loss should be there, protecting you. That okay, if price wants to take the other block and keep going up, then now it's something else. It's no more what you bargained for. So you leave the trade and you wait for the next one. Okay, it's just like for example, if this was your other block here, okay, and then you are placing a buy, price started going up and then it starts coming back down. It hits your stop loss below the other block and that's it. All right, you don't have to shift your stop loss or be thinking that okay, I'm emotional, maybe price will go up. No, sometimes it will not go up as you're seeing here. Sometimes it will keep going down. So your stop loss is there to protect your account from heavy drawdowns. All right. uh So about the indicators, as I use Lux Algo sessions, that's just to maybe sometimes I just on it and then I off it back, which is just to maybe show me where's the low of Asian session, where's the high of Asian session, London session, and all that. And that's one of it. The next one that I use is it's called man, I forgot what this shit is. The second one that I use is called the ICT high time frame candles. This one is just to help me, all right, if I'm on the 15-minute time frame or if I'm on the 1 hour, all right, it will show me what is happening on the 4 hour, daily, and the weekly. Like for example, what I have here, this is the 1 hour chart, and this is how the 4 hour looks. This is the daily time frame, and this is the weekly time frame. So I'll be able to see the daily candle how it's forming, and then what the 4 hour is doing before seeing what the 1 hour is doing. Yeah, this can help you if you don't have a paid version, but for me, I can use. I mean, can have a lot of charts on my screen, okay, to can have a lot of charts on my screen. Here I can put the daily time frame, I can put the daily here, put the 4 hour here, put the 1 hour here, and put the 15 minute. But if you don't have that option, which is the paid version, you can use that indicator, which will be showing you that okay, this is actually where this time frame is going. All right. Let me see how many more questions do we have. What type of trade is advisable for beginners? Please, can you analyze GPGPY? No, we are not analyzing now. What type of trade is advisable for beginners? I don't really seriously understand this question, Clovis. We have been teaching you, right? If you have been attending classes, you should already know what to do, all right? You can watch the recorded lessons on the Telegram and on YouTube as well. Okay? I don't think that should be a big problem for you. I don't know what I've done with this guy. What are the two? All right. Okay. I think I've answered almost all your questions. How much can one need to pay to have all those settings for backtesting? You can just go to your Telegram, to your trading view, you go to your profile, you check their plans, okay? Please for the name of the indicator, please for the Telegram link. Check on the group. I think I've been sending out in group for a couple of times now. With what we have learned so far, can we start trading, or you let us know when to start? You can start trading if you practice, all right? Practice what I've taught you. If you practice it, you are good to go. If you don't practice, you are not good to go. Okay. So guys, that's it. I think I've answered all your questions, and I wish you guys the best and happy weekend.